Speaking there about the President's Buhari's roads and rail initiative. So the head of the central bank, Godwin Emefiele, is sitting right now, starting the two-day meeting, rate-setting meeting, the final one for 2019. Let's get a sense of how the markets had been and what will be part of the considerations before the 11-member committee starting the two-day meeting today. Let's talk to Johnson Chukwu for a few minutes. He's the CEO of Akari Asset Management. He's joining us via Skype from downtown Lagos. Johnson, good morning. Let's get this conversation up and running. If you take a cue from what we've seen so far this year in terms of capital expenditure, I'm sure you listening there, looking at the Apapa Oshodi rehabilitation by the Dangote Industries Group. This is a lot of spending. The finance minister says we spent 650 billion. She said the government will look to ramp that up to about 900 billion before the end of the year. Do you think this is one of the stories that we're looking at as the Monetary Policy Committee begin to digest a broad economy and the markets into their decisions today, tomorrow?
Good morning, Bosin. My take is that, for instance, the Dangote expenditure is a private sector expenditure and will not materially affect the systemic liquidity in the economy. What will affect the systemic liquidity is that when the federal government begins to release capital expenditure budget. And of course, we know the budget has not been approved. So the earliest we expect capital releases in January. And even at that, I do not think the impact of the capital releases, given the paucity of government revenue, will have an effect on the liquidity economy. I think the pressure on liquidity comes from implementation of the minimum. But having said that, my is that the MPC meeting of today and tomorrow should that to make economic growth in the growth 2.5% quarter. Of course, we want to see another inflation 1%. If you consider the factors and the period is coming from
Johnson. Mr. Johnson Chukwu, sorry, we have the audio is a little bit patchy, so we're going to cut this conversation. We'll come back to you. Stand by. Let's reconnect that and see how that will flow through. We want our viewers to really understand and get the insight here provided. Johnson Chukwu, be on a standby. We'll get back to you in a few minutes within the show. We'll try to reconnect that and see if the audio will be more clear and with a lot of clarity. Okay, Johnson, you're back with that. Okay, sir, continue, please, from where you were. So let's talk about, you're talking about the capital releases, but if you look at the GDP numbers and inflation that we have for the month of October, how do you squeeze all of this together into your rate setting, your outlook on interest rates?
If you look at the GDP figure that came out in last month, was released last week, of 2.28%. The implication is that we are seeing improvement in economic growth rate. The second quarter report was revised to 2.12%. Bosun, can you still hear me?
I guess we have a bit of a problem there. Johnson Chukwu, thank you so much. Let's take this back and see whether we can reconnect with you later on the program. Quickly, before we take a break, take a look at where we finished off on the market street on Friday. The stock market came out strong. We gained 0.5%. But if you look at the big five sectoral gains, that tells you that the market was really on the upside. That's what you call the secondary data. The all-share index and the equity cap back at 13 trillion. Roll that away. Look at the volume. Very consistent with our weekly figures. 17.249 billion naira was the naira value of total shares traded on the Nigerian Stock Exchange, and that's in 20,000 transactions. If you look at those five sectors I was just talking about, the banking sector took a bit of profit taking, but you look at the consumer goods, 6.02%. On the upside, the industrials beat 2.25% off the market. The insurance came in about 0.5% in the green, and the oil and gas were really hot, 2.16%, the hottest for the week outside the brick and mortar, consumer goods, industrial goods as well. Okay, let's go to the over-the-counter market. NESD over-the-counter market. Very quickly, folks, 1.03%. Investors took a bit of a profit back. So you see the NESD index there reading 706 points, double it, and the market cap at 507.85 billion naira. A very decent week, if you ask me, if you consider the size of this market, 128,728 transactions. Let's finish off this session looking at the FMDQ exchange place, or what they call the FMDQ securities market, in terms of the treasury bills and the naira bond. Let's start with the open market operations. 144 transactions on Friday, 76.22 billion naira in net naira value. Your discount high, all now around those double digit, but of course, you know what's going on there with the yields on bills. That's the naira bond. Folks, I was talking about the open market operations, the OMO. That's the final one that you can find at the bottom. Then you find the Nigerian treasury bills and, of course, the naira bond. A snapshot of that for you. Let's take a break. We'll be right back into. Analysts on Market Street are asking if the jump that we're seeing in terms of liquidity flowing into the equities market is a one-off catalyst. But that's one big story that I'm sure the Monetary Policy Committee of the Central Bank is considering today and tomorrow. We've seen a rejigging of the market via secularized information, redirecting treasury bills investing by the Central Bank into not just equities, unlisted securities, and other financial assets such as BAs and CPs. That's bankers' acceptances and commercial papers. Let's get Johnson Chuku back here very quickly, and we hope the internet connection is there. So, Johnson, are you asking yourself if this reawakening, the kind of this Godwin Emefiele's rejigging of the treasury bills market bodes well for the equities? How long do you think this honeymoon will last?
My take is that as long as we have the present interest rate, the appropriate thing is for investors to underweight their portfolios in fixed income and overweight them in equities. So I expect this trend to persist unless there's any distortion in the economy or the economic space. And that's not any distortion. One should expect that funds will now flow back to equity. Look at the yield on treasury bills. I mean, we see yield trend southwards to the point that we are not talking about 4% yield, which is far below the inflation rate. And the 4% yield is also somehow lower than the dividend yield we are experiencing in the market today, given the current equity prices. So investors will naturally want to go to equities where they have prospect of capital gain and even dividend yield that's higher than the treasury-based yield. I mean, if you look at the treasury bill, the 365-day bill are trading about below 10%. So with such yield environment, naturally investors will push to their investment in equity. I expect the trend to continue in the immediate future.
Okay, great. So in terms of the CMC meeting on Thursday last week, I'm sure you were around for that meeting, your final meeting for the year. What's your take, what's your take home, as it were, on the state of the market, what the SEC is doing in a number of areas, e-dividend, multiple subscriptions, reworking, as well as market discipline?
Well, if you look at what the assets regulator in the capital market, that is SEC is doing, which they actually drives the CMC. If, for instance, the issue of e-dividend and unlike electronic payments or direct settlement, which is coming from the India Stock Exchange, what we are doing is automating a lot of the processes to reduce the level of manual human intervention and also reduce the build of the large pool of unclaimed dividends, so that investors will actually get their payments directly into the account. A lot is being done to improve the market efficiency. A lot is being done to improve the integrity of the market and also make it a broad base, as well as the introduction of multiple products into the market. So these are the push that are going to further broaden the market.
Okay, so moving into the new year, what's your outlook?
I think we should see an improvement in the GDP growth rate, particularly if the MPC meeting tomorrow, close of the MPC meeting or outcome of the MPC meeting includes a further reduction in the monetary policy rate. Recall that the last time the MPC reduced the monetary policy rate was in March this year. And within that time, we've seen a gradual improvement in GDP growth rate. We've also seen, we saw a downward movement in inflation rate, which unfortunately reversed in the past 2 months to now 11.61%. But if you look at the yield environment today, the fixed income yield environment, there's no instrument, short-term instrument that is yielding close to 13.5%. So the current MPR is no longer representative of the yield environment. It's no longer signposting the yield in the market environment. So I expect the MPC to bring that down maybe by 50 to 100 basis points so that it will be in tandem with the current yield environment. I expect liquidity to go into capital infrastructure when the budget is passed on time. So if funds are going to capital investment, capital infrastructure, we should expect the impact of that to be an uptick in economic activity. On the flip side, the challenge will be in terms of demand, consumer demand, which has been quite weak. I hope that with the implementation of the new minimum wage, we should see liquidity flow into the hands of consumers, and they will see an improvement in consumer demand.
Johnson Chukwu, thank you so much. It's the start of a brand new week, and a final week is always a very busy one for CEOs such as yourself, holding meetings and all of that, but more importantly, looking at the pay pockets. Salaries got to be paid this week, so I'm sure one of the things as CEOs like yourself, looking at the payroll for the week. Thank you so much. Have a great day. Johnson Chukwu, the CEO at Carry Asset Management and Investment Banker as well.